Hey guys, welcome back to a brand new video. I'm RexFinance, and today there's going to be a lot of people that disagree with me. There's also going to be a lot of people that agree with me, and it's okay. We'll get along, right? I just encourage you to watch this entire video, hear my thesis, and at the end of it, comment down below whether you think I'm a clown and I'm going to be wrong, or if you actually agree with my thesis and you think I'm going to be right. This is going to be an interesting next 12 months in the stock market. If you think back to the last time the NASDAQ hit an all-time high, that was 749 days ago on November 22nd of 2021. 749 days. And today, if we track that back, we go to the 5-year chart, we can see that the NASDAQ is just 2.42% away from hitting a new all-time high. If we would go back to like October of last year and I told you that at the end of 2023 we'd be nearing a new all-time high, you would have probably wanted to submit me to an insane asylum because of how crazy that thesis was. And most people did think I was crazy. I actually did make a video in October of 2022 calling the bottom. But if you want to go watch that video, it's kind of fun to look back and see how my thesis played out. Hit the eye in the top right-hand corner. It'll open up in a new tab. Go watch that after this video. It's really interesting. But what has happened since October of 2022? Well, we can look at the market cap share of S&P 500 for the mega cap 8, and this tells the full story. Right now, the mega cap 8, which is Google, Amazon, Apple, Facebook, Microsoft, Netflix, Nvidia, and Tesla, they make up over 27%, almost 28% of the total market cap of the S&P 500. That is a record by far. Now, yes, over the course of years, we would expect this percentage to grow and grow and grow and grow, which it has. But if we look at the S&P 500 growth, we can see that the mega cap 8 make up over 50% of that market cap, 50.8%. So since the bottom in October of 2022, what has happened is big tech companies have been going higher and higher and higher and higher. And a lot of people, if you don't have exposure to those companies, your portfolio remained flat or even red while the stock market was technically rocketing and rallying, which is very disheartening to see as an investor. But today, something very interesting is happening. And we can look at the heat map. That sounds really cool, right? Heat map. Basically shows what companies and what stocks are red and which companies and stocks are green on the day. If we look today at the heat map, Nvidia is down 2.6%, Microsoft is down 1.3%, Apple is down almost 2%, Google's down almost 2%, Facebook's down more than 3%, Amazon's down almost 2%, and Tesla's down over 1%. This is very, very interesting because this is the exact opposite of what has happened since the bottom in October of 2022. But you can see outside of big tech today, there is a lot of green on the board. In fact, the NASDAQ today, I'll refresh this just so we get the most up-to-date numbers. The NASDAQ today is up over 0.5%, while big tech is all down more than 1%. That says a lot about the breadth of this stock market rally. And if you paid attention at all to financial media, the talk of the tape on CNBC from these financial experts was that if this rally, or basically they would say that this rally was fake and that it would sell off because the breadth of it wasn't there. It was just a handful of companies that were causing the rally, and they didn't believe that the market rally would broaden out. And for the most part, they were correct, except they weren't correct over the past 2 weeks. This market rally is broadening out to a lot of these tech companies, these small caps, micro caps, medium caps, mid caps, the large caps, anything other than mega cap 8 has been rallying. And I'm sure a lot of those financial experts will still find a reason to be bearish and dismiss this market rally broadening out, but things are going to get really interesting, and it's because of a couple different things that I'm going to talk about in today's video. But really quick, if you are new here or returning and not yet subscribed, please subscribe down below. Also join my membership, completely risk-free. If you don't like it, if you don't find value, I will give you a 100% refund. So it's a risk-free membership, so you have nothing to lose. So just join. Hit the Patreon link in the pinned comment or hit the join button located right next to the subscribe button. But with that, let's go ahead and talk about 2024 and why I believe your stocks and your stock market portfolio is about to break records. For starters, if you go back to the video I posted in October of 2022, I laid out a Goldilocks scenario, or at least what the markets viewed as Goldilocks and highly unlikely. But this Goldilocks scenario has been playing out to an absolute T. We've had a resilient economy. The jobs market has remained strong enough that we've avoided a recession. GDP growth has been really incredible. And inflation has also come down rapidly while all of these other things are taking place. Nobody in October of 2022 believed that we could have a strong economy and see inflation come down. But that's exactly what has taken place. And I've said this many times on my channel, but the Fed has won the battle against inflation. I'm starting to see other financial YouTubers and influencers and CNBC even mentioning this, but I mentioned this several months ago, that there is disinflation in the pipeline still when it comes to housing. You can see that the CPI rent of shelter has finally been falling. This typically has a 12-month lag in the CPI data compared to what's actually happening in real life. And really quickly, I'm editing this video. What I didn't mention is this is a big deal because shelter makes up more than 40% of the headline CPI data and core CPI data. And shelter, for the most part, has yet to really disinflate. So that is a huge weighting in this CPI data that has disinflation left in the pipeline, which is why I believe, and the markets are also starting to believe, that the inflation battle has been won, and it was won a long time ago. We know that over the next few months, this CPI rent of shelter disinflation is going to come and cause more disinflation in the CPI data. And in fact, if you strip out shelter and food and energy, CPI right now is at 2.0%. 2.0% should sound very familiar to you because that is the Fed's goal. They want inflation to be at 2.0%. And we are there currently. Tomorrow, Tuesday, December 12th, so the day after I'm posting this video, we get new CPI data, and it's expected to come in at 3.0% year over year on the headline and 4.0% year over year on the core. I actually expect headline numbers to see a 2 handle. I expect that headline CPI is going to come in at 2.9% year over year, and I believe core CPI is going to come in at 3.9% year over year, further confirming this thesis that inflation has been defeated and that possibly the Fed will cut rates in 2024. But I don't even believe that rate cuts have to happen for your portfolio to hit a new all-time high. People seem to dismiss this, but it is a huge deal. If we look at the amount of share buybacks that companies have done since Q2 of 2022, it amounts to $812 billion. That is $812 billion worth of market cap in the S&P 500 that has been essentially erased. And this is going to make a significant impact when we approach new all-time highs like we're doing now. There are less shares outstanding of these companies, and these companies have been able to buy back their shares at discounts. I personally think of PayPal. It's a company that I've been buying left and right as much as I can. Their company, since 2021, has repurchased basically 10% of their company, meaning they've taken 10% of their company off of the public markets. And what this means is it takes way less buying power to reach new all-time highs because of the amount of share buybacks that have been done since the beginning of 2022. And the next catalyst I want to look at is the money market mutual funds and how many dollars are deployed into money market funds currently. Right now, there are 5.9 trillion with a T dollars that are invested in money market funds. Yes, this has typically gone up through the years, as it should, because of inflation and your dollars being worth less. But if we really zoom in, since 2021, there has been a skyrocketing in the amount of dollars that are deployed in money market funds. And this makes sense, right? Interest rates have gone through the roof, which means you can get a high risk-free yield on your money. This makes sense. People pull their money out of the stock market and get a free 5% risk-free on their money. If you can get 5% risk-free with your money, why would you risk your money to try and get 8%? It doesn't make a lot of sense for most people, which is why you've seen such an inflow into money market funds. However, I believe this is going to reverse in 2024. In fact, it already has started doing so. If we look at the US 10-year Treasury yield, we can see it peaked at about 5% in October of this year. This is actually when the most recent dip got bought up, and we've been on the upswing ever since October of 2023. So October of this year. I don't know why I'm saying 2023. But since then, the 10-year Treasury yield has fallen by more than 70 basis points. This means that the yield people are going to get on their money market funds is also falling and going to fall as long as the Treasury yields also fall. And when risk-free yields fall, we get much closer to what's called TINA. It stands for there is no alternative. There is no alternative to the stock market if you want to get return on your uninvested cash. This forces people to invest in the stock market rather than the bond market. And this is entirely cyclical. Yes, the amount of dollars in money market funds is going to fall. But at some point in the future, it's going to rise again depending on our current economic cycle. And right now, with the amount of dollars sitting in money market funds being at an all-time high and not even close, I believe we're much closer to peak dollars in money market funds than trough dollars in money market funds. So I believe that a significant portion of the dollars that have been put into money market funds over the past year are going to cycle back to the stock market in 2024. And we also can't forget that 2024 is an election year. Like it or not, most election years end up being very, very green years. In fact, in the S&P 500 during the 6-month periods around presidential elections, so between September and February of every election year, the markets have only been red 5 times since 1950. That compares to 13 times being green. And we can also see that 2 of the 5 red occurrences happened in 2000 and in 2001, as well as in 08-09 when there was the housing crisis. So those were 2 big bubbles that popped, and they just happened to occur during election years. So if you even want to strip those out, the market's only been red 3 times surrounding elections since 1950, and the last time the markets were red was in 1976. And there is a reason for this. Turns out, if you are in power and you are in control and you are the president and people's financial conditions feel really, really good, it's hard to vote against you. So every single incumbent president does their best to make sure financial conditions are as good as possible when the election comes around. And if there is no incumbent president, say a president has already served 2 terms, and we're choosing between 2 new candidates, well, that previous president wants their track record to be very, very good at the end of their term. So they also try and make sure financial conditions are superior when their term ends. And to end this video off, I do want to look at the forward PE ratios for large cap, mid cap, and small cap companies. For large caps right now, they are below their all-time highs. Right now, the average forward PE is 18.9 on the S&P 500, so that's actually cooled off quite a bit. I would expect that number to cool off even further. Mid caps are below average, below historical averages by a wide margin, but small caps at an average forward PE of 13.4 are way below historical averages. So clearly right now, the opportunity is with small cap companies. And if you look into the data, small caps have basically been flat for 5 years, and over the past 10 years also haven't done much. And this is another cyclical thing in the stock market. The stock market is always cyclical. small caps will shine again. And I do believe that in 2024, small caps are going to outperform for a variety of reasons, but that's why I've positioned my personal portfolio into majority small cap and mid cap companies going into 2024. It's actually important to note that the S&P 600 is different than the Russell 2000. There's actually quite a big difference if you didn't know. The S&P 600 is companies with market caps between $300 million and $2 billion, while the Russell 2000 is between $1 billion and $3 billion. Valuations on the Russell 2000 are still below average, but the S&P 600 is actually the most value you can find in the stock market right now. So as you go down the chain of market cap valuations, the lower you get, the more value there is according to historical data. Right now, obviously, historical data can be wrong. It doesn't mean that things have to correct what history states things should be at. So take this all with a grain of salt. But I do believe that, retail investors are going to have a great 2024 when a lot of our stocks go back to all-time highs. Right now, most of our stocks that we hold have recovered slightly from their bottom, but have a long ways to go to hit new all-time highs, which is why I believe your stocks and your portfolio in 2024 will set new records. But with that, I'm not a financial advisor. I could be wrong about that. We've been very accurate since October of 2022. I hope that will continue. Again, if you guys are new here or returning and not yet subscribed, please subscribe down below. It means a lot to me seeing all your new faces. And don't forget to comment down below whether you agree with me or disagree with me and why that is. With that, have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.